Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame impulsive scenario where we are looking for a move towards the downside after a wave 1 or A is in, wave 2 or B is also already finished, and this is now the beginning of an impulsive structure to the downside, either part of a wave 3 in a 1, 2, 3 for deeper prices or potentially a wave C to the downside. If we look at the range where price is currently ranging, then we can see over here that we have a bit of an efficiency, a gap, or some people call it a fair value gap, with an order block above. And once price is entering this area over here, this gap, it has the tendency to fill the gap all the way to the upside. So this area over here is for me quite important for potentially the high of 2. And that is why I still have a little bit of a dotted line towards the upside, where of course this can be the high of a wave 2, as the most common target for a wave 2 is between the 0.5 and the 0.786, but I would like it if we fill the efficiency and then eventually move towards the downside, where if we look at the targets towards the downside for a wave C or potentially a wave 3, then the target area for wave C is the blue fibs, the 1 to the 1.236, taken from the high to the low of A to the high of wave B, where for a wave C you want to see a 5-wave structure with the 1-to-1 being at 28.1k and the 1.236 at 27.5k, which is in nice confluence with the support area that we have here around 28k. Now for a potential wave 3, you want to see deeper price action, so it's also a 5-wave structure, but then it's not finished, because then you still expect another 4 and then another drop to the downside in a wave 5. Usually the minimum target for a wave 3 in an impulsive scenario, where we're then looking for a 1, 2, 3, 4, 5, is the 1.618 trend-based fib extension taken from the high to the low of 1 to the current high of wave 2. Sitting at 26.6k, which is very close to this blue support area that we have over here, which is sitting between 26.2k and 26.5k. If we look at the other scenario, which eventually is also bearish, as we are then looking for a move to the downside in general, but in this scenario we might still find a way up to the upside first, where we could make people bullish again by moving towards the upside, especially if this scenario is going to play out. So what you are looking at the moment is an expanding flat in a wave B, where the overall scenario is an ABC zigzag. So we have a 5-3-5-wave move to the downside. That's then what we're going to be looking for. But what is so interesting about this scenario is this move to the upside. So in this scenario, inside wave B, we are then also looking for an expanding flat, which is a 3, and then a 5-wave structure to the upside. And the 5-wave move, that's what's interesting, because a 5-wave move is an impulsive structure. So what you then expect is this move to have 5 waves to the upside, volume increasing while price is moving to the upside. And especially if we go towards like the target areas around the 31k level, you can imagine people are starting to become bullish again, because they see a 5-wave impulsive structure to the upside. There's volume coming in. We are reaching 31k highs, for example, or actually very close to the general high, but the 31k levels before. This is then the end of a wave B, and we go down again. So many people then get baited, which is interesting, of course, from a trading psychology point of view. Now, if we look at this area over here, you can see this is the most common target area for a wave B in an expanding flat. So we're looking for a 3, and then a 5-wave move, where the most common target area for B is between the 1.236 and the 1.38, pulled from the low to the high of the wide A, sitting between 29.3k and 29.1k, and it is just above the blue support area that we have over here around 29k, where you can also see the 1.618, which is a rare target for an expanding flat wave B. Now inside this wave B, we are then looking for a zigzag, which by itself is a 5-3-5-3-wave structure, because again, in a wave A and in a wave B, we are looking for a 3-wave structure, while this at the moment looks very much like a single structure. So we are then still looking for a move to the downside in this scenario. And what is interesting, compared also to what I just mentioned with the gap that we have over here, is that if price would find its way to the upside, to the white box over here, which is sitting between, let's say, 30.1k and 30.3k, we could then see a move to the downside where the 1-to-1, which is an important target for a zigzag, which is then pulled from the high to the low over here, to then the high, potential high around the white box, the 1-to-1 is an important target for a 535 zigzag structure. And then you can see it is right in the middle of the most common target area for a wave B. So that is why this wide support area over here is so interesting. We're filling the gap. There's an order block, some more resistance over here, but it is an interesting area in general for then potentially a move to the downside. And then the targets for C will only be known the moment the high of B is in. And another interesting scenario, or another extra reason why this scenario is interesting, is because of the double top at 30.4k. We have high number 1, high number 2, so price can then eventually also take the liquidity above the double top, where we also have this resistance area between 30.4 and 30.6k, or continue moving towards the upside to fill this inefficiency over here, this gap towards the 31k levels, 31.1k to 31.3k. If we go to the micro levels, go to the 50-minute over here, then what is happening is quite interesting, right? So you see a yellow box, but for now, I like to talk about the white count that you see in a potential A, B, and then a C to the upside, which is a 5 complex B 5-wave structure. Now, inside of this wave B, we then have this price action over here. And this move to the downside is quite important for the different scenarios on such a low time frame. So I wrote a little bit over here. You can see after this drop to the downside, we actually have quite a long sideways range. Now, this means that the probabilities for this being a wave C or this whole range being part of a wave B is higher. So basically saying this might not be a wave 1, 2, and we already go down for much lower prices, and then a wave 3, 4, 5, all the way down. But instead, this range over here increases the probabilities that we might not be ready for a continuation down, like all the way down, but still see a bit of a move to the upside for that white box. And if we then look at this move down, we can either think, hey, is this then a wave A, or is this a wave C? Because it's then not a wave 1, 2, and then you want to see continuation in a 3, but then we're looking at this to be an A or a C. A wave C is an ending structure, meaning you're going to be looking for a expanding flat. But an expanding flat where the low of a wave C and then an A, B, C, the low of a wave C not taking the low of a wave A is incredibly rare, because then we're talking about a running flat, which is definitely not something you see on the chart very often, extremely rare. So therefore, I'm thinking about this move being a potential wave A, for then this range being a B, for then eventually maybe a C to the downside. We do have a double top over here for some liquidity, which is of course interesting. Double tops and double bottoms are like a magnet for price. You see a double bottom over here at 29.7. So we can still have the situation where we move up, potentially hit the 886, but not take this high, for then a move to the downside, take the double bottom, move up for C, and then an A, B, C, and then we're ready to move to the downside. So basically throughout the weekend, we are then going to see a range over here for then eventually lower prices. Of course, if price is going to take the double top with volume and it continues, well, fine, then it continues to the upside, it takes this high, we're going to see the white box potentially being hit, because that is an area, right, that we are looking for. So I don't really care if it moves up directly or it first goes down, but I would say, like, from this point of view, like looking at this range, it could be nice to move towards the downside, towards the support area over here, take the double bottom, move up before then a continuation down. If we look at the CVD divergences though, it is supporting a bit of bullishness. So we have the bullish CVD divergences where the target is this high from this divergence over here, and from the more local bullish divergence, it's this high. So the double top that we have over here could then potentially be taken. Then these bullish CVD divergences have played out. The chart is then neutralized for potentially that move to the downside or continuation. We have to always, as traders, be reactive. We wait and see what price is going to do. If it comes up here, if it's just going to push, well, obviously there's not going to be a short trade. But if it is not going to push and find resistance, maybe a bit of a swing failure pattern type of move where price then takes the highs, closes the candle below, continues moving to the downside, then this could be a potential entry for a short. Stop loss above the high, looking for downside. Very nice, right? So we have to wait and see what price is going to do around this area. We do have a bit of bearish CVD divergences as well, which I can better show you on the chart over here, where you have lower high on price, but on the blue line and the yellow line there's higher high, so there's also more local downwards pressure. So yes, we have bullish CVD divergences, higher lows on price, lower low on blue over here between these two lows, and between these two the yellow line is showing bullish CVD divergences, but at the same time both the blue and the yellow line are also showing more local bearish CVD divergences. So there is definitely absorption of longs for potentially a move to the downside. It's a bit of a mix regarding the CVD. If we then look at the probabilities of the different scenarios, then on the low time frame, we do expect a new low to be made based on the probabilities regarding the Elliott Wave scenarios, meaning that either we get this move over here, looking for a bit more upside and then a move down, or potentially we have this scenario down, up, down. Of course, there is still that potential scenario where we just go straight up and then go down, but at the moment, probabilities wise, it's not something I'm thinking about at the moment. Of course, the charts always change, but I will update you the moment I think differently. And on the micro, I would really like to see this white box being hit. So if we open the target box over here, I would like to see this inefficiency being hit, of course, like fill the inefficiency, take the white box, but locally maybe like something like this would be very nice, of course, based on the structure that price is generating over here. I hope this video was helpful or valuable for you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.